Hello, everybody, and welcome to today's conversation on China's fintech future. I'm Tim Grieve, the executive editor of Protocol, where we arm decision makers in tech and other industries with the news and information they need to do their jobs better. Today's event is squarely in that mission. If you're running a business today anywhere in the world, you need to understand the impact China is having. You also need to understand the fast-changing world of fintech. So I'm glad you're able to join us today. I hope you'll take part in the conversation by tweeting questions at #ProtocolChina. And if you haven't already, please take a moment to sign up for our weekly Protocol China newsletter at protocol.com/newsletters. And with that, I'd like to introduce David Wertime, the executive director of Protocol China, who will introduce our panel and moderate today's discussion. David?
Thanks, Tim. As Tim said, I'm David Wertime, executive director at Protocol China, where we focus on the people, power, and politics of Chinese tech. We host monthly events and a weekly newsletter. You can find us at protocol.com/China. And I'll be your host today, and I'm fortunate to be joined by three wonderful guests. Joining me are Rebecca Liao, co-founder, advisor, and former COO at Skuchain, a currency-agnostic blockchain for global trade, and a World Economic Forum tech pioneer for 2019. Rebecca is currently advisor to Sommelier Protocol, where she's designing their DAO, or decentralized autonomous organization, to optimize for governance, platform growth, and regulatory compliance. She's also a fellow at the Stanford Program in Law, Science, and Technology, where she focuses on tech policy. Xiaomeng Liu is a director at Eurasia Group's geotechnology practice, where she focuses on the interactions of emerging technologies with geopolitics, market dynamics, and regulatory norms. Xiaomeng provides in-depth analysis on key policy issues like data governance and privacy, big tech, antitrust, AI, and digital trade. Before joining Eurasia Group, Xiaomeng was the China practice lead at consulting firm Access Partnership. And last but not least, Robert Greene is vice president and chief of staff at Patomak Global Partners, which is a financial services consultancy where his client work focuses on a range of risk and strategy issues related to derivatives markets, equity market structure, payment systems, and fintech companies. Robert is also a non-resident scholar at the Carnegie Endowment for International Peace's Cyber Policy Initiative and Asia Program. And before joining Patomak, Greene was a senior advisor at the U.S. Department of the Treasury. So this is going to be a great gathering. I'm really grateful to our guests for joining us, and also to all who are tuning in for this. So first, let's take a quick step back. A few things. One, China's state-run banking system, creaky, conservative, not customer-friendly. Small and medium businesses basically have a lot of trouble getting loans from there. Two, China doesn't have the equivalent of FICO scores or credit scores. The PBOC has a system, but it's pretty bad. That is, the People's Bank of China has a system that's pretty bad, which means there needs to be another way to rate individual and enterprise level creditworthiness. Three, after starting the century with very low internet penetration, now everyone in China has a smartphone and is hooked into the Chinese internet or intranet. And four, there's lots of cash in China, like there is currently virtually everywhere else, looking for somewhere to go. So we have all the conditions for a fintech environment that could leapfrog the United States, more developed but older financial hardware. And we have a government in Beijing that wants to tap into that, to juice consumer spending, increase its own power and visibility, and maybe, just maybe, start to edge out the dollarized global financial system in favor of something it builds and controls. Exciting times. So let's get to questions. So at the risk of being reductive, I want our audience to understand where China is ahead of the US or the world so that we know what's at stake. So to start, can each of you give me one area where you see China in the lead right now when we stack it up against the United States or the West? Rebecca, let me start by picking on you, if that's okay.
Absolutely. Thanks so much, David, for having me, and thanks to Protocol for hosting this fabulous talk. I'm very honored to be on the same panel with all of these esteemed guests. So to answer the question very simply, they are ahead, but that's by design. So fintech is one of those areas in which official U.S. policy is that it's not a critical technology, unlike AI, robotics, quantum computing, other more bleeding edge technologies that we consider ourselves a little behind in, but we ultimately need to win. For something like fintech, on the other hand, there's such confidence in the fact that the US dollar is the global reserve currency and that our capital markets are the first destination for a lot of companies that are looking to raise capital beyond their means, that we don't need to be first in fintech. We can be a so-called fast follower. And so we've been very content to allow other countries, such as China, but also other developing market economies, to move forward in their fintech technology with the idea that for those economies and for those societies, it makes a lot of sense because they don't have the dominant economic position. But the United States currently does. What they're finding out, though, is that maybe they've sat on their hands for a little too long, and that China, but other countries that are following China's model, are starting to develop technologies that could make their own money, such as crypto, and start to chip away at the U.S. dominant position in the global economic infrastructure.
I would say, sorry.
Please go ahead, Xiaomeng.
Sure. I would say one area China is definitely ahead of the U.S. in the fintech realm is the area of digital bank, central bank-backed digital currency, CBDC. In China, this is what they call eRMB. There are multiple motivations behind the promotion of eRMB, but there's a group of scholars and some former bankers of the country believe that introduction of CBDC by major economies around the world is inevitable. And this type of financial instrument will play a very big role in international digital economy competition. And latecomers may even see their sovereign currency weakened or replaced by this type of new monetary policy tools, and leading to more financial risk and undermining of domestic monetary policy influence. So they believe that eRMB is a very good way to safeguard monetary sovereignty of China and also protect financial security and enhance China's strategic competitiveness around the world.
Yeah, and then David, I would build on top of those comments and just say that, surely with regards to a central bank digital currency that's constructed in the way that China is working to construct it, China is further ahead than the U.S. One of the things I think we'll probably get to later and is a question of, if that's the direction China is going, certainly it is ahead. However, is that really the direction that the U.S. wants to follow, or is there an alternative direction that the U.S. could go that would be more in line with, U.S. national security interests and also the structure of the U.S. economy and our rule of law and market economy that we would want to go towards instead. So yes, I would say China, at least with regards to how it views how a CBDC should be constructed, is further ahead in that direction, but not necessarily the direction that U.S. and perhaps other countries are going to go.
Great. Thanks, Robert. I feel like we're definitely hitting on a very big issue here. So let me try to unpack this a little bit. Xiaomeng, you in particular name-checked the CBDC, also called the digital yuan, also called the ECNY, also called the eRMB. Choose your nomenclature. It's the same thing. For audience members who are a little bit new to this subject, can you explain to them how ubiquitous, how far along is this in China right now? And a little bit about why is this a big deal?
Yeah, certainly. So this is an initiative started by the Chinese government about 2 years ago. They start doing a little bit internal experiment at a number of state-owned enterprises, particularly in the financial sector. Start with the big four state-owned banks. And in the past year or so, they significantly ramp up their pilot project. It started with the single scenario coupon type lucky draw exercise where the government dispatch monies in the form of eRMB and people can use it on their mobile devices to buy movie tickets, to purchase things online, to rent a bike, or use it to buy things during the single stay annual sales event online. Those are the initial use cases. But since then, China has significantly expanded its use cases. Now people can even use it to get their salary from if they are employed by public sector entities in China. And the latest example I heard is like people are using it to pay their Communist Party membership fee with ERMB. A very interesting case that you won't normally see in a Western economy. But these are the novel cases where they're trying to apply the use of ERMB as much as they can. And also the Winter Olympic coming up in early February is another milestone event that the government has been using to propel the advancement of ERMB. But if you look at the whole pilot project in the whole, even in the past, I want to say quarter, they have tripled their pace of ramping up the pilot project of use cases here and there, mostly sponsored by the government with a few private sector participants. If you look at the whole scale of ERMB usage in China, is still pretty minuscule compared to all the e-payment transaction being done in China online, just through the dominant e-payment tools, Alipay and WeChat Pay. But at the same time, the government are putting some pretty serious pressure on these major e-payment giants of China, and at the same time giving a competitive edge to digital RMB. I think that's the dynamic. Even right now, they have a very, very small market share, but they are on an upward going trajectory.
And we've learned from watching China over the decades that things that start small, where there's central government support, can very quickly become very, very major factors. And what we're talking about here, so a couple of things just to, I guess, to sprinkle in, for audience members who are less familiar with China, right? QR codes, the use of private payment platforms are ubiquitous. Now the central government is adding something that is its own digital fiat currency. This isn't DeFi, right? This is government-backed legal tender. But Xiaomeng, you said something interesting at one point. You used the word coupon. Yes. And, my understanding is that the central government can issue this currency for particular purposes, or can use this platform to fine people, or to release money for a certain period of time. It gives a lot of tools into the central government's toolbox that they didn't have before, that they don't have with paper currency, right?
Yeah, technically, I think those are the technical options on the table. There's also some sort of risk to the adoption of ERMB, because right now the private sector options are so popular. What are the incentives for people to switch off that and use another option where their data may be more centralized, get collected by the central government and being managed in a more centralized way? The privacy concern is one of the domestic adoption barrier to ERMB for sure. To the extent that people have concern about big tech grabbing their data, monetizing them, they have somewhat similar concern about the central government managing everything from Beijing and combine all the data they have, become even bigger brother than they already are.
Right, and far fewer protections than they might against private companies. So let's zoom back for a second, because Robert and Rebecca, I asked you about this earlier in a brain trust. What does this mean? Robert, walk us through a little bit in terms of the international platform that Beijing is building or could build around this central backed digital currency. Does it create the ability to, please go ahead.
Yeah, sure. So just first want to backtrack just a tad. So, as we think about kind of where the ECNY is right now in China, it is important, I think, to note that a lot of the experiments have focused on urban centers, right? And on top of that, there are still a lot of even though Alipay and WeChat Pay are very ubiquitous in China, particularly in urban environments. According to World Bank 2020 data, it's something like 40% of retail transaction volume is still cash. And I think that really underscores that when we're talking about kind of how this is going to be rolled out within China, there's kind of what is going to happen in the cities, in the urban environments, and what's going to happen in rural areas. And so about 40% of China's population is in rural areas. Of that 40%, about 40% of those individuals, they're primarily banking with something like a rural credit cooperative, a small bank. So it really is, I think, there was a great piece in the Wall Street Journal this morning that talked about some of the kind of challenges that exist to, the uptake of ECNY within in China. And I do think that the question of how are you going to incorporate all of these Chinese people who are not banked by the big state-owned bank, but rather have these other banking relationships is a huge question. And it's something that the PBOC is thinking through. They've contemplated getting the state-owned telecoms involved. They've contemplated setting up clearing centers that would basically link up with some of these rural financial institutions. So these are really fundamental structural questions that need to be resolved in order for there to truly be large-scale rollout. But that having been said, I do think there is a strong political will in Beijing to accelerate the ECNY's use. And as you mentioned, there is the potential for ECNY to grow significantly within China. And I think Xiaomeng is completely correct to say that that it is indeed quite possible that policy levers will be pulled to make that happen. So that then I think gets to the crux of your question, which is then, okay, what about the rest of the world? I think that there's been a lot of statements by Chinese policymakers and leading academics in Beijing that illustrate from China's perspective, and particularly from the perspective of very senior leadership in China, that there are concerns about a concept called financial security, and that financial security concept essentially, if you look in some of the Communist Party's leading political journals, there's concerns that the U.S. dollar, its dominance in the world, poses a threat to China. And there are certainly individuals at the PBOC and in other parts of government within China who think that the ECNY is a potential solution to this problem that they perceive. That will be a very complicated. It will be very complicated to roll out the ECNY overseas and use it as a mechanism to circumvent U.S. sanctions, because one of the biggest concerns that certain Chinese leaders have is that U.S. sanction powers can be used to essentially shut off Chinese financial institutions from payments rails, and that power can be applicable not just to U.S. dollar denominated payments, but also other payments in other currencies as well. And kind of built on top of this is the fact that as China looks at expanding along the Belt and Road Initiative, I mean, something like 80% of Southeast Asian transactions, I should say, between China and Southeast Asia are invoiced in U.S. dollars, and so there's questions as to how exactly will how is China going to do the Belt and Road Initiative in the way that it wants to, while at the same time relying upon U.S. dollar payments rails. And I think that is, if you look at the rhetoric coming out of certain officials and certain academics in China, that is where the folks who do see the ECNY being used as a mechanism to, one, give China control over a payments rail that facilitates RMB transactions, and two, address these so-called financial security concerns. Those are kind of the motivations driving this.
Right. So that's the big picture. And Robert, I want to get back to you in a second about how the U.S. is thinking about some of this. But Rebecca, for a moment, let me sort of zoom into the experience of people in China. Right. You've mentioned that the financial system within China, the fintech system, is further ahead of the U.S. What are the upsides? Xiaomeng talked a little bit about some of the privacy concerns, some of the downsides. But what does it mean for the lived experience of people in China, whether maybe it's in some of the more urban areas where this stuff is more commonplace? What's the good stuff here? In other words, why is the government so excited about this?
Well, I don't know if the government was excited about this initially, but fintech is one of those things that happens at the grassroots because there's a need to be fulfilled and private enterprise decides to fill that need. In the case of early fintech, so digital payments in the form of QR codes, Alipay, but also more advanced financial services like what you were talking about earlier, David, that it's very hard to get an accurate credit rating in China. And without accurate credit ratings that are agreed upon by a general system, it is very hard for people to receive credit. So whether that comes in the form of credit cards, short-term loans, long-term loans, et cetera. And so you see a proliferation of peer-to-peer lending services as well that allow people capital access. The last generation, or the latest generation, I should say, iteration of that is crypto, where you're able to get very high returns. I mean, granted, they're quite volatile and in some cases speculative, but you're able to generally get quite high returns on capital that the state has a hard time controlling. And so fintech, from the perspective of a Chinese citizen, is a new world of financial access. It started off with convenience, and now it's moved on to higher level financial services. And that's why it's been so successful within the Chinese context. But to bring this in line with the discussion that Xiaomeng and Robert have started, the reason why we are interested in fintech that's happening in China is because of how it's affecting the domestic experience, but more importantly, how it is being perceived on the international level. And it is the case that a lot of international trade invoices are denominated in USD. It is considered a very stable currency, and that's why it is used in these international trade transactions. What China has started to do, particularly with its trading partners in Asia, is to mandate or strongly suggest that ECNY be used instead. Now, granted, these are in pilot context, but what people are discovering is, all right, I may not be getting all the basis points that I would be getting with a USD trade. However, this is really convenient. It is still terrifically hard to do a cross-border payment denominated in USD, particularly in the Asian region. And so what China has discovered in its technology journey is that so much of technology adoption is not necessarily based on cost, at least initially. It is based on convenience. Is this a useful product? Is it user-friendly? Are people happy to be adopting this instead of doing it by the old method? And what they're finding is the answer is yes. It's the same reason why people paid 99 cents per song on the iPod 20 years ago. When if it were packaged together in a CD, I'm old enough to remember what that is, it would be much less costly. But nevertheless, the convenience of it was very compelling. And China is beginning to scale this idea, not just through cross-border payments with its Asian partners, but in mandating, for example, that ECNY be the base currency for the RCEP, which stands for the Regional Cooperative Economic Pact. So that's sort of their version of the TPP that does not include the United States. If that trade agreement does go through with that provision, then obviously that'll be a big boon for adoption of an overseas China CBDC. But I think they're looking at the big picture on this. On the one hand, improving financial services domestically, yes, that's important, but in order to achieve their geopolitical objectives of shoring up their financial security position, as well as chipping away at the global economic infrastructure that has been dominated by U.S. interests so far, and finally at the status of the U.S. dollar as reserve currency, they are focusing on the overseas market and the offshore financial services that China currently offers.
So are U.S. policymakers appropriately concerned about the creation of an alternate system that could eventually, edge out US dollar hegemony, right? And I will just say, in my talks with a lot of experts, what I hear is, well, it's not going to be a problem in the short to medium term. And my follow-up question is always, what about the long term? All three of you, work with policymakers and decision makers. Robert, you were at Treasury. Does the U.S. feel sufficient urgency to react to this? What's the pulse? Robert, can I start with you?
Yeah, sure. I certainly think that it's a timely question given all the activity on Capitol Hill today with the NDAA. certainly, I think a lot of attention and concern related to the long term, particularly, I think that that has grown in the last, even I would say 6 months. And I think people are increasingly in Washington paying attention to this issue and thinking about what is the appropriate way that the U.S. can embrace what the U.S. is great at, which is, we have a strong rule of law, we have a strong market economy, a history of innovation. So, embrace those kind of what really makes the U.S. a special place, and leverage that in a way that allows us to have the best payment system in the world. And I think that reasonable people disagree as to what's the best approach. But I would say, kind of as a net assessment, I think it's really encouraging to see more and more attention being paid to this issue. There's been bipartisan legislation introduced on Capitol Hill to think through the national security implications of the ECNY. And so the short answer to that is yes, I think folks are paying attention. The longer answer is, okay, but what are we going to do? How are the deliberations as to the appropriate next steps going to proceed? The fact that stuff is moving relatively slowly from a policy perspective here in the U.S., I think illustrates the checks and balances and the deliberative nature of the U.S., and that's not a bad thing. I think one of the things when we look at China and their rollout of the ECNY, it's a pretty high stakes game, and if there are mistakes made along the way, that's very serious.
Absolutely. So Rebecca, could I just jump in for a second? Xiaomeng, I want to let you add in your thoughts into, but Rebecca, you, Robert, I think gave a kind answer as it relates to U.S. policymakers. Do you have a similar answer? You're a bit of a technology whisperer to policymakers in D.C. yourself. Do you think people, get it? Do you have a different answer from Robert or a similar answer?
It's interesting because the term intersectionality has become quite popular in other contexts, but I think it's appropriate here as well, because when you look at the ECNY and Chinese fintech and Chinese approach to blockchain and crypto in general, and probably you can just lump in the Chinese approach to technology, you have two different policy areas there that don't necessarily always have aligned interests or perspectives. So you have the policy area that looks at China, and then you have the policy area that looks at technology. And so when you're focusing on China, you're obviously interested primarily in national security issues, in geopolitical issues. A lot of the competitive nature of our relationship with China comes into play. If you're looking at technology, you're looking to foster technology within the US, but you're also looking to regulate it, because I think there's recognition that some of the technology companies that were mid-size to large a decade ago have become huge, and many in DC would argue that they've become monopolies that need to be broken up. And so there's also a very strong will to regulate what could be, to link it back to China, a very important competitive advantage when it comes to dealing with China. And so there's sort of this paralysis, I think, that results from that. Now, is it temporary paralysis? Absolutely. This is something that all of the incredibly smart policymakers in DC are going to figure out once they've had time to discuss it. But for the moment, there's no real policy coming out of it, because we're not sure on what to do with respect to a US CBDC or the presence of crypto in the US. But on the other hand, we understand for the most part what the China challenge is, and how to sort of marry those two issues is a little unclear. What I would encourage policymakers to do is to talk to the people who are creating this technology. And I realize that comes across as quite self-interested, but truly, if you talk to industry people, the reason why is not necessarily to divine their interests and to cater to them. That's not what I'm suggesting at all. But I think it is important to understand what are the technology trends that are driving the massive growth and energy that is behind fintech, because so many of these developments happen at the grassroots. And by the time regulators are aware of them and understand them, it's a little too late to start engaging with them. And so to understand it at that level of depth, I think it's the next step for a lot of these policymakers, and they're moving in that direction. But I would encourage them to really lean into this approach, because if you stay at the level of trying to understand it from just a pure economic policy or foreign policy perspective, you're probably going to not be able to arrive at an answer because everything will seem a little too high level. Once you bring the technology perspective into it, I think you'll better understand what strategy you need to adopt in order to compete with China on this.
So the USG is in a deliberative posture right now. At a certain point, deliberation becomes paralysis, but maybe we're not there yet. Xiaomeng, let me shift gears with you a little bit, because we're talking about the global implications of all of this. Setting aside for a moment the dollarization, the dollar hegemony question, and the alternate financial system question, I want to talk a little bit about systemic risks, right? So the real estate firm Evergrande has been in the headlines a lot the last few months because of the systemic risk that poses to the global economy and financial system. But before Evergrande, there was Ant Financial, right? And the common understanding around the reason that regulators.
Thanks everybody for your patience. Technical difficulties, can't explain that one. Maybe what we're saying is, too controversial. The joke though. So I was in the middle before we experienced some difficulties. I was in the middle of picking on Xiaomeng with a particular question about systemic risk. And so, we talked a lot about what an alternate financial system might mean, but less about the domestic risks, which can fast become global, that China's fintech sphere could pose. And I mentioned Evergrande, the real estate firm, as having been much in the headlines for its potential systemic effect on China and then the world. But before there was Evergrande, there was Ant Financial. And the common narrative is that the reason that regulators have asked Ant Financial or told Ant Financial to pause its IPO and then to restructure has to do with a dynamic between Jack Ma, the ultimate founder, and Xi Jinping. But there's a lot more there. So Xiaomeng, can you talk a little bit about some of the systemic risks that Ant Financial, or more broadly, China's fintech poses to the system that regulators have good reason to be concerned about?
Yeah, absolutely. I think the short answer is just financial risk. You look at the approach Chinese government have taken at various fintech innovations throughout the year. You can say this started with a P2P, person-to-person financing platform for a while. It was, when it first started, the government think this is a good way for individuals and underprivileged business owners to get a little bit financing and help them each other out in an area where the state-owned banks wouldn't bother to touch. So it started with this financial inclusive idea that's a vibrant and potentially constructive element of China's financial world. But then as it grew bigger and bigger, the government realized there's a lot of unscrupulous activities involved in it. At one point, I think PBOC officials said 80% of those P2P platforms are scams. They are kind of a Ponzi scheme. So at the end of, I think, 2018 or so, they shut down the whole business entirely. The whole industry was told to exit or transform yourself to something else within 3 to 4 months. And that was the P2P cycle. And you kind of see similar thing with the crypto mining industry as well. It started as an industry where it gives local government a lot of good projects. Some of them are labeled as cloud computing project. That's part of the technological capacity building exercise, maybe good for China's technological strategic competitive advantage over the long term, and it gives local government employment opportunities and GDP growth and blah, 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 blah. But by the time the government turned around and installed the idea, formally endorsed the idea of CNY or ERMB, the cryptocurrency mining industry got wiped out as well. I think this comes to a certain extent the same concern that government worry about in the case of crypto mining. A lot of average household retired citizens in their at the end of their lifespan and hold all of their life saving into crypto type of investment vehicles or schemes and lost out big time. I think at the end of the day, this type of risk will become certain type of threat to social stability of the country, and that will be a serious risk to the party's rule. I think that's one of the common themes around the government's crackdown to P2P, e-commerce, credit rating agencies, crypto mining as well. I think the IPO case and also after the suspended IPO, the government has been putting a lot of restrictions more incrementally to tighten the screw. And I think that will, in a more gradual fashion, undermine the market position of the e-payment giant and make them a much, much smaller element of the digital payment world and the digital economy life in China as well. Right now, they are very, very big. If the government shut down them overnight, it will be too drastic. That will be too disruptive to the whole financial system. So they're doing it in a more incremental and then doing in a slower pace. But I think overall, the risk with P2P and crypto mining is kind of a common theme. And so this type of policy direction will continue, and we will see the dividend of Ant over time. But I think the link between Jack Ma and Xi Jinping is somewhat type of stretch. I think at this point, it's someone more political savvy and strategically savvy, like Jack Ma himself. He probably have stakeholders in his company from all sides of the camps. And I think some of the news report on this story is somewhat skewed to the extent that it points to a direct linkage. I think there may be a direct linkage, but that's probably a secondary consideration in Beijing's actions target Ant.
Right. So we have simultaneously a very vibrant fintech sector that, as Rebecca said, sort of bubbled up from the grassroots to fill felt needs among the Chinese populace due to a sort of inadequate, old, creaky banking system. And we also have a increasingly active regulatory state, right? A government that has sort of embraced what it needs to embrace, but also wants to manage these risks closely. So we've got both on the business side and the regulatory side, there's areas in which China is, again, to use the simple term, ahead of the United States, or is doing things differently. So could each of you offer something that you think, a learning that we could have in the West, in the United States, from where China's at, whether that's stuff we should copy or adapt, or cautionary tales about what we should avoid? Can I start with you, Rebecca?
Sure. So I think that if U.S. policymakers are looking at China's approach to fintech and getting a little nervous about falling behind, the answer is not necessarily to try to cut off Chinese products. I think that because the thinking around China policy in general and national security policy has been so much more developed than the thinking around technology policy, a lot of tech policies that touches on China will sort of fall back into what the China approach would be, which is this is a national security issue, this is a strategic competition issue, and the way that we should deal with it is to try to restrict. I think that's the wrong approach to it. I think the right approach is to lean into what the United States does incredibly well, which is foster innovation. Now, the crypto market in the US has exploded, even though we were not the winner as late as 6 months ago. And the reason for that is China had effectively decided that it was seeing crypto as a threat, and therefore it would put a temporary ban on it. I do think that the current ban is temporary. However, they've decided that what crypto stands for, what the communities are building, they're very nervous about this. And so they've decided to put a hold on it for the time. And that has allowed the US market to really thrive and come up with the latest innovations. And that'll continue for the short term, which frankly in crypto means the long term as well. And so leaning into that innovation culture is incredibly important. Now, how does that translate into policy around fintech? I think in terms of the CBDC, I hear all the concerns that are being voiced by the Fed and Treasury around issuance of a US CBDC. What does that mean for first and foremost the expense and implementation of such a program. I mean, if it's one of those things where even if we start now, it'll take a decade to really fulfill, is it worthwhile to undertake that exercise? And if we do undertake that exercise, is it going to be a digital dollar? And so it's currency that can sit in your wallet in digital form, and it can be independent of the financial system, but at the same time, it's not a stable coin. Or should it outright be a crypto stablecoin? A stablecoin has the ability to be compatible with crypto rails. That's an incredibly attractive feature of it. On the other hand, it's much harder to control anti-money laundering. And so all these questions are giving the U.S. policymakers a little bit of pause on this. You know, it's a big undertaking, and do we have the resources right now, given everything else that's happening in the U.S. domestically, to tackle this question? And I think the answer is you sort of have to. This is an initiative that China has really moved upon, and they understand that it's going to take the long term in order to realize their objectives. But the long term arrives a lot more quickly in technology than you would anticipate. And so I do think that the U.S. is to really lean into that innovation culture in order to respond to what's happening in China. We'll probably get into this a little later, but the last point I'll make here is it dovetails into the larger U.S. approach on competition between the US and China on technology. So I'm moving out of the fintech space at this point. I'm commenting on the technology space in general. The Democracy Summit is happening, and I'm very glad that we're convening our allies. They're incredibly important in deciding how we are going to counter some of these real threats that are posed by illiberal forces using technology, including countries like China. On the other hand, I think we have experimented with floating this argument to the international community that because China is a national security threat in these areas, that we should therefore not purchase their technology or not engage with them economically in ways that we had been freely doing before. And I think what we're finding is that capitalism is incredibly strong. The attraction of the Chinese market, the attraction of successful business technology models is such that it's incredibly hard for the US to continue making that argument. And so how do we compete? It's not by shutting out the competitor. It is by competing and winning. And so I would focus on that if I were a policymaker looking at these issues.
Sounds good. Thanks, Rebecca. Robert, what should we copy, adapt, avoid? We've got a few minutes left.
Yeah, sure. I would say one of the developments we should respond to at least is one of the components of the Chinese Communist Party's five-year plan is to increasingly try to influence global digital currency standards, right? And I think that can be read to kind of talk to the technology, the importance of technological standards and the importance of the raw technology that Rebecca was just speaking to. Currently there's a multi-CBDC effort based in Hong Kong involving Hong Kong Monetary Authority, the PBOC, the Central Bank of Thailand, that really is emblematic, I would say, of those efforts to shape standards. And this is similar to what some of the work that China has done with regards to cyber sovereignty and its view of how the internet should exist. And I think that the U.S. needs to think through how it can respond to these efforts by Beijing to influence the construction of digital currency standards, but also to just exert more and more influence over wholesale large value payments rails. And as we talk about the benefits or risks of CBDC or other payment systems reforms here in the U.S., I think it's very important to kind of bucket the questions about financial inclusion domestically and the questions of how to improve U.S. retail payments rails domestically. That's a very important policy question, but it is in many ways distinct from the question of what about the large value payment rails and what about these broader geopolitical concerns, because at the end of the day, something like 95% of cross-border payments are fundamentally large value wholesale payments, and that's critically important, I think, to keep in mind for policymakers as we kind of look at the national security geopolitical questions regarding cross-border commerce. and proliferation of potentially new standards regarding those transactions, and then separately important policy questions regarding financial inclusion.
Xiaomeng, why don't you take us all the way home? Copy, adapt, avoid. What's your advice to policymakers here?
My advice to U.S. policymaker here is not just look at China, look at the rest of the world, particularly some Asian governments' approach to CBDC and cryptocurrency. I think there's as Rebecca already highlighted, there's a trend for U.S. to look at China and maybe follow them too closely, whether that's AI strategy, 5G, they target Tencent, Alibaba, maybe we should put a clamp down on big tech as well, and this extend to the cryptocurrency realm as well. A lot of the discussion, even they haven't taken any significant move yet from the financial regulator side, but a lot of the discussion in the US has been focused on how do we target the cryptocurrencies. There are 11,000 type of tokens out there, and they could be a major decentralized finance force become destabilizing to the economy. So there's discussions and even movement on the side of placing money laundering charges at the cryptocurrency exchanges. This is a very regulatory focused approach to it. And this changed just in the past year or so from US change from a crypto friendly place to a crypto hostile country. But if you look at other countries' approach around the world, there are a variety of them. Countries like Singapore, Hong Kong, even more conservative regulators in Japan and Korea, they're taking some regulatory moves as well as some approaches to foster innovation at the space. So you pick and choose to make sure your policy approach is balanced. I would like to encourage U.S. policymakers to look at those policy recipes.
I think that's a perfect place for us to end. I really appreciate these three outstanding thinkers joining us on this subject. Thanks for hanging in there, everybody, through a few technical glitches here and there. Thanks for everyone for joining this Protocol China event. See the three of you around.